Welcome to the Infront ASA Q4 2020 results. With us today we have, as always, Max Hofer, our CFO, and Christian Nesbæk, our CEO and co-founder. After the presentation, there will be a Q&A session, so please post any questions you might have in the chat. Now, over to you guys in Oslo.
Hello everyone, welcome to this presentation. Infront is a company that helps our customers gaining a unique market insight and the help they need to take the right decisions. We are a full-service financial solution provider that offers a wing-to-wing solution to the advantage of our clients. We cover everything from web solution to professional analytics and trading solution for a number of different assets. We have also a fast and content-rich data feeds with a calculation and validation service. We have a history of very strong growth. The revenue has increased with 500% over the last 4 years. Our coverage has increased to more than 120 exchanges and we have more than 8 billion daily data points. We have offices in 10 countries with around 3,500 customers. Infront offers application or software with content, and since the content or service part is vital to our offering, everything is sold as a service, software as a service. This is sold as a subscription-based model where every customer pays a monthly fee to us based on the delivery and the number of users. Very simple but attractive business model. We can from this quarter report a stable underlying performance with an increase in project-related and volume-based revenues. We continue to realize cost synergies and have reached a record high adjusted EBITDA of 6.2 million. Last quarter we reported the acquisition of NB Trader. This is now completed and included in the numbers from mid-quarter. There has been a bid on the company. I will not say much about that in this presentation, except that I encourage everyone to read the offer document, including the board's recommendation. We see an increase both on the top level and EBITDA from last quarter. The main reason for this increased volume is volume-based revenue and what we call project. Let me explain. Volume-based revenue is revenue not based on subscriptions but consumption. Nice growth there, mainly driven by the high volume in the retail segment. Project is consultants involved in bigger deliveries. Here we see the analyzed income per quarter, and as you can see, we classify volume-based revenue as recurring, even if it's not subscription-based. This can be discussed, of course. Some will say it's not recurring since it's not based on subscription. Others will say that since it's from subscribing clients, it falls into the same segment. Anyway, earlier this has been not so significant for us, but at this higher level it makes sense to specify it so it's clear to everyone. This revenue is clearly more risky since we all know that the retail volume can dry out really fast if there is a major market event. It's also relevant information that this revenue comes from a subsidiary, Transaction Solution, that we own 60%. After acquiring several European players, we have become the largest European player in our segment. We are now in the process of aligning teams and product offering, making solution redundant and getting everything on one platform. We are also expanding our sales department and rigging the company for more growth. We have some interesting examples to report from sales this quarter. First, we have Lloyds Bank. It's a new win in the UK, well-known name. Also, same with well-known name with UniCredit, where we are implementing Infront solutions toward our buy-side customers in Italy. Pareto Securities, strong growth in user-based for the private investor trading solution in the Nordics. We are delivering part of that, so that benefits us also. And this we can see, the same trend we can see with other clients that we have that has retail exposure, that there has been a nice growth in that segment lately. Another nice case, LBBW Asset Management. This is the first really large customers with our valuation and calculation solution. So they have a huge portfolio with many different assets. It's both liquid products, it's OTC, not liquid, and a lot of things that we need to calculate the value on to calculate the total value of the portfolio. And earlier, this company has used many different solutions put together, or try to put that together to get the complete calculation. But we can offer everything in one solution. And it's also included front end. So, many of the instrument is only one answer to how it can be evaluated, but on others, the portfolio manager needs to click through those instruments and see what we have done, and he can override that and have other options on the screen to choose from. And everything is documented on how the pricing has happened. And we also will deliver transaction cost calculation and also best execution validation. So this is a one-stop shop for fund administrators for their main task. So this is a very interesting product and a great win. On the portfolio side, Donner and Rothschild are moving from their installed portfolio management systems to our cloud-based solution. So this has been very successful, and this is where we are focusing on now on product development to move the complete portfolio system over to be cloud-based. We also unfortunately need to report on churn. Normally we don't report that much churn, but this is first time it is as big as this, so it's one of our major clients. So it's 2 million euro analyzed that we lose from end of this year. So this is of course sad. So when we lose a client, sometimes it is because they have chosen a competitor and then we haven't done a good job. And we also see that there are other reasons for leaving us. It can be a number of things like acquisition or whatever it is, and it's really nothing to do with the product or the price. And this cancellation is in that the other segment. So nothing really we could do about that. But anyway, it hits us. Okay, so let's move to cost capturing. So we are moving forward on this, and with 5.8 million euro realized in annual savings so far. We are still on plan and with guided synergies, but the second part, because of technical integration issues, is a little hard to get. We need to be very careful so we don't end up in a situation where the cost synergies is drowning in churn effect. We expect a major part of the outstanding synergies will come at the end of the period, so it will not be much to report on in the coming quarters. And now, over to our CFO, Max Hofer.
Thank you, Christian. Starting with the financial highlights for the fourth quarter 2020. Our quarterly revenues increased by 4% year-on-year from 28.5 million euros to 29.7 million. The main driver for this development was an increase in volume-based revenues, as you can see, which have increased by more than 50%, or roughly 0.7 million year-on-year. This again was driven by very high trading volumes being handled by our subsidiary, Transaction Solutions AG. Furthermore, seasonal completion of customer projects added another 1.5 million in project-related revenues in the quarter. Recurring revenues came in at 26 million euros compared to 25.6 million a year ago. Roughly 150,000 euros of this increase are attributable to the inclusion of NB Trader as of mid-November, and another 250,000 euros are coming from organic growth. The quarterly adjusted EBITDA came in at 6.2 million euros compared to 4.8 million a year ago. The adjusted EBITDA margin was 20.8% versus 16.9% in Q4 2019. Looking at the adjusted EBITDA after carving out the 40% minority stake in Transaction Solution that is held by our partner in Germany, the adjusted EBITDA is standing at 5.7 million euros compared to 4.8 million the year ago. Let us now take a closer look at the key financials over the past few quarters. As can clearly be seen in the top left, our revenues have been rather stable over the past year, with a seasonal peak both in Q4 19 and Q4 20. Again, this is as expected and due to seasonal customer projects in the DACH region. Underlying subscription revenues were rather flat during the period. The adjusted salary and other OPEX costs, as can be seen on the top right, had seen a downward trend during the first 3 quarters of 2020. Q4 saw a slight increase to 14.8 million euros, and this is partially due to salary adjustments in various regions, but also due to M&A related costs and costs related to options. Gross margins have stabilized above 68%, with a margin of 68.3% in the quarter, and a gross profit of 20.3 million euros in the fourth quarter, which is roughly 0.9 million higher than in Q4 2019. The adjusted EBITDA at 6.2 million for the quarter and gave us an adjusted EBITDA margin, as already said, of 20.8%. And also, as has been described earlier, a strong development in Transaction Solutions led to a significant and, as we believe it at least, temporary uptick in top and bottom line from the business. Moving now on to our operating segments. The largest segment is Terminal and Feed Solutions. This includes the flagship Infront terminal, as well as local terminal products acquired as part of the acquisitions of Market Connect and VWD. Furthermore, it also includes various feed products and the recently acquired NB Trader. Taking out the positive contribution from NB Trader of roughly 150,000 euros in the quarter, this segment would have been pretty flat quarter on quarter. The Portfolio and Regulatory Solutions benefited from customer projects related revenues. The underlying recurring business has been stable throughout 2020. The segment Media and Other, which is comprised of our news agencies as well as legacy publication operations in Germany, also includes the Transaction Solution subsidiary. This division has seen an extreme upswing during 2020 as trading volumes quintupled in the period, and the revenues in this business increased from in total 2.2 million in 2019 to 5.4 million euros in 2020. So there we have seen a significant increase of the business. The strong development in this business can also be seen in the segment's EBITDA development throughout 2020, despite the continued downward pressure that we see in the legacy publication products. As you can see, there was a 3.5 million EBITDA contribution from Media and Other alone in the fourth quarter. The negative EBITDA contribution from group functions and eliminations increased to euro 4.6 million in the quarter. This again was driven by general salary increases, M&A costs, and also option cost accruals. The DACH region accounts for roughly half of our group revenues. It is by far the largest region, and it has seen a slight decrease of 0.2 million euros year-on-year. However, as mentioned when looking at our operating segments, this development hides very different developments across different product segments. In Q4, we benefited clearly from customer projects and a strong performance per transaction solutions. Excluding the increase in the transaction solutions business, the fourth quarter would have come in roughly euro 1.2 million lower at around 14.3 million for the DACH region. So the transaction solutions business really has been a strong driver of both top and bottom line. The Nordics saw revenues of 6.9 million euros in the period. This compares to 6.5 million a year ago and 6.6 in the previous quarter. The increase is mainly due to completed customer projects that have been invoiced in the fourth quarter. The other regions, which include our operations in Italy, Benelux, the UK and South Africa, saw the revenues increase to 7.3 million euros in the fourth quarter of 2020, which is up 0.9 million year-on-year, and also an increase of 0.5 million versus the third quarter 2020. This increase is due to the continued rollout of our solutions in the UK, as well as the inclusion of NB Trader as of mid-November. During the fourth quarter, the company strengthened its cash position by 1.8 million to 18.4 million by year's end. The cash flow from operations was positive with 5.5 million, and this is supported by a positive net working capital effect of 1.8 million in the quarter. The cash flow from investments of negative 3.8 million euros includes the acquisition of NB Trader in the UK, as well as capitalized R&D costs and other investments made in the course of the quarter. Cash flow from financing was negative 0.2 million euros, and this reflects the repayments of various lease liabilities across the group. Looking at the cash development over the past 12 months, we can clearly see the effect of the underlying seasonality of customer payments in our various subsidiaries. The outgoing cash balance as of the fourth quarter 2020 was a stated 8.4 million euros. And this is marginally lower compared to the beginning of the year when it was at 18.7 million. As you can see, in Q1, we saw an increase in our cash balance by roughly 6.2 million before one-off payments related to the acquisition of the VWD Group, as the annual customer payments became due. During Q2 and Q3, our cash position was decreased by a total of 6.7 million euros, while it increased again by 1.8 million during the fourth quarter. And it has to be noted that this increase was during a period when we also paid for the transaction or for the acquisition of NB Trader. In summary, Infront is a leading European fintech company, and we are providing state-of-the-art products to financial professionals across Europe. The company has a proven track record of achieving long-term revenue and profitability growth, generating through that significant value for its shareholders. The team is working tirelessly on positioning the company for the future by aligning and streamlining our product offering. We are continuing our efforts to capture and monetize cost synergies identified as part of the recent transactions in the UK, Germany and Italy. Finally, we will selectively pursue an attractive pipeline of strategic growth prospects. Thank you for now, and we will open for questions.